Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Chris, is it a scary day to watch a major meltdown, it appears, on the major equity markets?
I think for the masses, it's a scary day. I mean, we've seen this kind of coming for a couple of weeks. We profited from the last drop about a week and a half ago, and we're anticipating this drop, and this is kind of going in the favor, that we've been expecting. But the majority of people, when you look at the sentiment in the markets, I mean, everybody is in panic mode today. You look at the NYSE volume, and the ratio is showing there's 11 shares being sold on the New York Stock Exchange to every one share being bought. And I look at the New York Stock Exchange, it's the big board, it's the big brand names. Those stocks are what the average Joe investor buys. And they're all panic selling. No one's really buying them. Everybody is just dumping their shares today. The VIX is up. Put call ratio is up, meaning people are buying protection, expecting markets to collapse. And rightfully so. I do feel as though the market is trying to put in a very major top here in August. But, if you're a technical trader, that's what I focus on is technical analysis. You see this stuff coming and you're already mentally prepared for this price action, and it's actually great to see it unfolding as we expected. So, it really depends on what type of trader you are. I mean, are you a regular investor looking at fundamentals, or are you a technical trader who can kind of see this happening and realizing this is just the way price moves? It should be expected. And we're looking for lower prices still going into next week. So I wouldn't be surprised if we see even more panic selling over the next few days.
Now, when we have something like this, like you said, every time a door closes, another one opens, what kind of opportunities are you looking at?
Well, yeah, we're seeing, the precious metal sector 6 years later has finally come to life. Gold's broken out. Gold miners are breaking out to the upside. Multi-year basing formations have been made and broken out of. So you can argue here that gold and gold miners are in a new bull market. Silver hasn't quite broken out yet, or the silver miners, but they're very close. They have all the signs are there. So safe haven play, as people are moving into precious metals, and obviously bonds have been rocketing higher as the more or less, it's kind of like the NYSE of safe havens. Everyone goes to bonds, the average Joe, and bonds have been rocketing higher in price. Yields, rates have been falling. So we're seeing that kind of real move into those safe havens, and really, we're not seeing huge money moving into precious metals. The majority of investors still aren't really getting into the metals yet, which is great, because we don't want them to get involved until we've already seen, 100% gain, and then the average Joe finally jumps on the boat, and that's usually when we'll be looking to potentially trim positions. But the safe havens, metals, bonds, those are where the money is going this week and really for the last several weeks.
Of course, the big question everybody asks is this a 1 or 2 day correction, like we heard when new tariffs were imposed on China, and then the market came back when they said, well, maybe the tariffs won't go on until around Christmas. Is this the kind of thing we're looking at, where it could be a 1 or 2 day thing, or is this going to be a long-term trend?
Well, yeah, it's tough to tell, and the market is set up to go lower. I think we could see the market test the lows that we saw about 6 or 7 days ago. We're kind of halfway there already to getting back to that level, or maybe we test the June lows, which are still a pretty good fall. So the big question is, are we going to get the kind of correction here like we saw in May? We've had the first sell-off, and then we had a bounce, and then we get into the second sell-off. And right now we're into that, just starting that second sell-off as of today, which means we could see another 4 or 5 days of downward price action. We could potentially see 2,700 hit on the SP 500. Right now it's trading at 2,850, so it's got about a 150-point drop. The big question is it just one of those corrections, or is it like an October through December type of correction? And that's what actually has me more excited, because the sentiment and everything is a little bigger this time around, that we could be in that October to December sell-off where we could see a huge drop in the SP 500. We could get back down to the 2,300 mark if we go into another massive sell-off. And we saw this a couple of years ago where we saw a huge sell-off in August. It's usually the most quiet time of the market, light volume for stocks, and we had a huge crash. And for all we know, that is kind of setting up potentially again in the market. So all you need to know at this point as a technical trader is the trend is down, the selling is continuing. The question is, does it find support at 28 or 2,700 or so, or does it find it down around the 24, 2,300? And at this point, you've got to be short the market or have an inverse position as a swing trader, because those are the two downside targets where things could really pick up some serious gains as the market falls.
A pattern I've noticed over the past few years is that things happen a little faster than people expected them to. So if they thought we could have a big correction in September or October, well, the correction starts in August. Or if they expected one in December, it starts in November. Everything, I think it's probably because it's computerized and instant, but everything seems to happen 2 or 3 weeks a little faster than it used to. Could that be a factor?
Yeah, I think it is. I think there's more and more systems out there that, we've seen a lot of big drops in the market that happen that only last 3 or 4 days, but we're seeing huge percentage drops. When you go all the way back, down back into early 2018 or late 2017, all the way till now, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We've had 11 drops that were significant in percentage points that happened in like 4 or 5 days. And really, the average Joe, you don't even want to chase those, because it's such a big drop. By the time you hear about it, half the drop is done, and then it just kind of picks up more speed for a few more days. It happens so quick. If you're not kind of right on the money and following intraday wise, or, you have systems in place to catch those, you just totally miss them. You're right. The market does move very fast, and that's why a lot of people have gone to systems. I've got a system that picks it up, follows the markets intraday wise, and it gets short when the market starts to roll over. We saw it about a week and a half ago. We ended up getting short, and we caught that drop that almost everyone missed simply because we follow it closely, and everything was showing that the trend and the technicals were turning negative. But, you blink, and pretty much that huge one-day drop, you kind of missed a major drop. So it's a tough market to trade if you're not on the ball and you don't know the key pivot turning points in the market where it should find support, where it's going to find resistance and reverse back down. You do have to be very, technical to understand these levels and be able to get in, get out, or trim positions, add on the next dip. It's a technical market. It's been moving amazing this year. And I think it's, as the emotions climb, like we're seeing panic is more predictable and easier to trade in many cases than a low volatility market. Just, you get these huge opportunities with price swings. And when people are panicking or getting really greedy on this high volatility time zone here, you can really nail these pivot points in the market.
We'll have more with Chris Vermeulen right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. to view our comprehensive company presentation, and for more information, please visit our website at naturallysplendid.com.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. I'm speaking with Chris Vermeulen. Chris, the gold game, is it popular yet, or are people still ignoring gold and it's only the people in the know that are really looking at gold and junior gold miners?
Yeah, well, I think a lot of people aren't into gold yet. And I know you've talked with Mike Swanson before, and he's talked about how there's a Robinhood brokerage account, and it shows the top 100 positions in all their accounts that this brokerage has. And really only about a month ago, almost no one in their brokerage firm really had any positions in any gold, ETF, silver, or miners. And finally, there's a very small percentage starting to get into them. But that Robinhood account is a really great gauge of what the average Joe investor trader is doing. And they're all still in the big FANG stocks. They're in NVIDIA, it's a terrible performing stock, but all these people are into all the things that are topping and have been moving down and showing very big signs of weakness, and none of them are really getting into the precious metals just yet. And that's what we want to see, because the market's put in a bottom. We got long metals and gold a long time ago. We're deep in the money, and the longer it takes, the longer it takes for the average Joe to get into this precious metals market, to catch on to it, the better, because metals are going to keep rising. Eventually, it's going to catch their attention, but might not be for months still. And when all those people start piling in, that's when we'll be looking to start to move out or trim positions or be more defensive with our protective stops. But no one is really getting into the precious metals market yet. The average Joe, that is. They're way behind the ball, but they always are behind the ball. And that's what we want, and we just kind of ride this trend until they're, drooling over it and talking about it. So just like Bitcoin, the big bubble at 20,000, when everyone's talking gold, just like they were Bitcoin, that's when we got to start to look out, because those are the last people getting into the market. Those are the people who buy high and they sell low when they're panicking and, can't handle the drawdown anymore.
We'll have more with Chris Vermeulen right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, the 10-year Treasury is now below the 2-year. Does that mean we're going to have a recession in the next 6 to 7 months?
Yeah, I don't follow bonds too close, but I mean, everything to me on a technical standpoint and looking at bonds and a lot of other different asset classes, I mean, yeah, I think we are getting into a recession. There's a lot of other leading indicators similar to what you just talked about with bonds, like if you look at the transportation sector, the industrial sector, the small cap stocks like the Russell 2000, all three of those are breaking down. And today, while the large caps and the FANG stocks are more or less still somewhat holding up, they're not making new lows. These leading sectors, those three, are breaking down today and could be starting a major sell-off. So I talked about this a little while ago, posted an article. If you were to take the Russell 2000, the transportation index, and the industrials, put them all together into one chart and divide it by 3, it kind of gives you your custom index of those leading indicators. And that chart pattern is identical to what we saw in 2008, just before we saw the big leg down in the bear market and everything collapsed. And the exact same setup is happening with those 3 leading sectors. So there's a lot of different things coming together. Really interesting if you dig into the technicals. It really is amazing. We are potentially starting a very significant leg down as of today. If this selling keeps going, this could be the leg that could start a bear market, depending on how far it sells off. So it's going to, it's really exciting. I'm keeping my eye on the market, and, you just got to actively trade this falling market as it happens.
So what are you telling your clients right now?
Well, right now we're long metals. We just got out of a short position in the indexes. We took some money off the table from this drop in price. We're looking for the stock market to put in a top. Potentially, it happened already, but we're looking for another leg down here in August. Starting August 19th, kind of all of our major cycle analysis comes together that we should be seeing a big breakdown potentially August 19th, give or take a couple of days. We've already seen a good drop, but there's going to be a lot of things coming together next week where we could see a real big drop in the market. So we are just being alert, getting ready to get short again, and we're long the safe havens because we expect they're going to continue to rocket higher going forward. So we're bearish at this point. Doesn't mean we're going to be short and we think this is a full-out bear market. I mean, if the market turns around, we follow the market. We don't really predict it so much. So if the market turns around, we'll be getting long in a couple of weeks. But at this point, we are short, get long the safe havens, and expect volatility to spike and a lot of panic in the market as things kind of wash out here.
What would you consider to be the safe havens?
I like gold, like the gold bullion ETF. Gold is, to me, it's the global safe haven. It's where the average Joe is going to want to move into, buy some gold in their portfolio. It's done very well. We've seen, you can argue there's bigger percentage gains to be done in silver and miners, but I do feel as though there's something about gold where it kind of holds up. It's not quite as volatile. It's more of a rock solid safe haven versus silver or miners. But yeah, I like gold and I like silver and I like the miners, and I'm long bonds, expecting those. So those are kind of the safe haven plays at this point.
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show, Jim.
My guest has been Chris Vermeulen from the technicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.